This is Martha Matters. From real estate, healthcare, current events, taxes, or just about any topic, we're talking about it. Call us with any questions on just about any subject. Now, here she is, Martha!
Well, welcome. And I hope you've had a good last week. We'll see what's going to happen this week. I can't tell you enough. I am very, very excited about the stock market. There are pitfalls and places that you shouldn't get into that I'll tell you about. One is the auto industry, and I'll tell you why. They need to come back, and they will come back eventually. But right now, between all the Japanese and South Korean cars and European cars, the tariff situation has not been resolved. It will be, but now is not the time to get the car. If you do, you'll sort of regret it, because let's say 6 months from now or something, there'll be much, much less, maybe even a no tariff, because it's all still being negotiated. We don't know the outcome. So, with that in mind, I'd say just for now, like through the summer maybe, stay away from the automotive sector. But the places to go high and buy whenever you can is fine. I want to tell you also to stay away from the oil, with one exception, or actually a couple of exceptions. Oil drilling like Devon, also different limited partnerships for drilling are fine, but I really would only recommend Coter. It's not an expensive stock, but it's not related to the gas at the station. And as you know, the prices are going down very nicely for the consumer. We're below the $3 a gallon change, which we haven't been in a long, long time, and it's still going down. But that's not good for the stock market. What is good is a company called Coter. Why? Because they're into the LNG. And liquid natural gas is what Europe uses, not for their car, but for all their heating and air conditioning. And we use it for that too, including propane gas. So it is very, very, very important to have some of that in your portfolio. As a relatively inexpensive stock, it's going to go up. That is one. The other thing, you know from the news from just a few weeks ago, Saudi Arabia and Qatar, Arab Emirates, they're all building factories and sending billions of dollars over here to build in the United States, as opposed to China and other places. They really believe in the United States. So for that, I would strongly recommend that you buy Nucor. And also, related to that, you can have a little bit of Caterpillar, because a lot of these factories need to either be rebuilt or built from scratch. So those are two different companies to be involved in. And with these new factories coming, jobs are increasing. And even if you start off unskilled, they will do training for some of it. And it will turn into a skilled job where you have a future. That is the nice part. So also, As you know, IBM and Nippon have merged, but our U.S. steel is the best and the strongest in the world.
You said IBM. You mean U.S. Steel
I mean
and Nippon?
U.S. Steel. I'm sorry.
Yeah, U.S.
That's
Steel
my
and Nippon.
mistake.
Yeah.
U.S. Steel and Nippon. And I'll give you an example. In San Francisco, they bought some of the steel from China, built a high rise of over 20 stories, and the top floors on one of them is starting to collapse, not because the engineering was wrong, but the strength of the steel from China is so much less. And it is related to the making of the steel. Evidently, our coal, which is needed to make steel, is hotter, more condensed, and does a better job of solidifying the steel. So, believe me, the Nippon U.S. Steel merger, I would invest in that as another topic. What I would stay away from right now is, and only temporarily, but for now, for the next couple of months at least, stay away from the bank financials. It doesn't matter who. Chase, Bank of America, Wells Fargo, what have you. They're going through insurance rates up and down. They lower them for mortgages. They increase them a fraction of a percentage, and then no one buys mortgages anymore. It's a very, very unstable situation, but it will be straightened out, and they're very good companies. They're good to invest in. Keep your eyes on them without buying now, and the minute they start to go up, just jump in and buy one of them, but not now.
I have a question about that, Martha. If you were keeping your eye on some of the stocks, you're talking about the U.S. car industry and now the banking industry, would you want to buy them at a really low price if you keep watching them? I know you can't, gauge the market. Mm-hmm. But would that make sense that you're thinking, okay, maybe in 9 months, and so 3 months from now start buying some of them, or no?
Oh, yes. It's just not now. But keep your eye on it. When they inch up, they only start going up by maybe 10 or 15 cents. And if they do 2 or 3 days of that, I would buy some so that you're in at the bottom.
Right. That's what I'm asking.
Before they go up.
Mm-hmm.
That's
okay.
a very good question.
Okay.
I'll do the same myself. The other thing that I've mentioned before, but I mention it again, if you're not in a position to be looking at the stocks every couple of days, you may have 2 jobs, or even with 1 job, now and then 10 hours, so then you have to go home and spend time with the family. That's fully understandable. There are only so many hours in a day. But what I would recommend is, in cases like that, and in cases you have a large portfolio, you still want something conservative. You don't want to lose all your money if there's a major bomb that blows up part of the United States or something. You don't want to take too much of a risk. I would again tell you to get the Vanguard S&P 500 index fund. They don't charge fees, number 1, and number 2, you probably heard just about a week ago, the S&P index has gone the highest it's ever gone. It's well over the 6,000. Mm-hmm. So, and it's only going to go up the next 2 to 3 years with all this new manufacturing being built in the United States. So put whatever money you have, not all of it, but if you don't have time to really search out stocks, put a good amount, what's comfortable for you, into that Vanguard S&P 500 index fund and forget about it. And once a month, they'll either send by mail the amount of it's gone up and how much dividends and interest you got, and you can reinvest the interest and dividends, or take it out if you needed to pay a bill, but don't touch the principal that you put in. That is my recommendation, and you're taking advantage of some of the growth that we're about to receive in the stock market. That's another thing. Now, also, please, people, when in the airline industry right now, I would stay away from Boeing as a builder, but not for long. I'm going to tell you right now, as of August 1st, you can go buying a few shares of Boeing and see what happens, and it's not highly risky. I'll tell you why. Saudi Arabia is contracting with Boeing for billions of dollars in new airplanes. So is Qatar. And that stock is going to go up. It's just not going up the next 3 weeks, let's say, in July. But toward the end of the month, and by the end of the month, I may not have another show like this because there's so much happening. I want to tell you now, be prepared to buy a little bit of Boeing by the end of July, because these major contracts from the Mideast are coming in. Even Israel's going to be asking for more drones, more planes, not as many planes as Saudi Arabia and Qatar, but the future right there is very good. But the next 2 or 3 weeks, next to nothing is going to happen with that stock. That's what I recommend there, but consider that. Also, there's a security stock. You know that your internets, unless you have LifeLock by Norton and some others, McAfee and so forth, security of people getting into your computer and getting account numbers and accounts you have, both with banks, with stocks, with anything, watch out. And the company that is doing very well, and it's a steady eddy, growing every single day, is Palo Alto. Paloalto. And the future is very bright on that. Yes, it's gone up a bit the last month, but it's still going up for quite some time. You're not chasing it if you buy a few shares of that this summer. The stock to stay away from that sounds very similar, and I'll just mention it to you, is, what is it? Panolarinar. And that is highly, highly speculative.
It's Panolinar,
Panolara.
Can you spell it?
Panalare.
Okay.
That is highly speculative, and if you pronounce Palo Alto funny. They may, by accident, put you in with this stock. Stay away from it, because this stock, for those who love to be day traders and risk takers, it's fine. But for most of us that don't want to trade every day and follow the reports, stay away from it, because it's almost like Bitcoin. It will go drastically up and drastically down. Also, I want to say, in the housing industry, be very careful. Now, that has two different sides of it. Companies like Lennar, like D.R. Horton, all these big contractor builders right now, I do not recommend any of them, because they're building hundreds and thousands of dollars hundreds of thousands of homes in new subdivisions, and there are too many being bought. The interest rates so far are not going down, and they're going to be blowing wind on trying to sell them, and the prices will go down by fall. I do not recommend buying stocks of contractors. What I do recommend is buying Home Depot and or Lowe's. People who still are not selling because they have 2 and 3, even 4% mortgages from a few years ago, around the pandemic time, boy, they are staying put and making out like banshees. But they still have changing family situations where they want to expand, like marriages of a Brady Bunch, or they want to reduce their empty nests. So with changing either way, increasing the size of the home or decreasing the size of the home, they're going to go to Lowe's and Home Depot. Now, those are steady Eddie stocks. They're not going to grow in one night by leaps and bounds, but every day they keep going up for the most part. And if they go down, it's because the whole market went down, so they may go down 1/10 of a point. The bottom is not going to drop out of them because they are very, very much in demand. And for the average homeowner, too, not just contractors. So, believe me, there are plenty of areas to choose from. Just very quickly, one other one that I would stay away from that people always used to hang on to were ones like Procter & Gamble, J&J, which is Johnson & Johnson. Those are and Campbell Soups. They were like recession stocks. It does not look like we're having a recession, so you can do better with some other stocks rather than those. You may not lose, but you might as well put your money in a savings account instead of them, because they're really not going to budge much. So let's take a quick break, and I'll come back with some more news for you. And stay with me. I want to introduce you to our main sponsor, Highland Plaza, located on US 1 on the east side of the Highland Drive traffic light. We even have our own left-hand turn lane. One of the places in there, the first one on the north side, is Easy Stop, and you will be surprised what competitive and beautiful prices they have. You should give it a shot. Also, Tony's Hairstyling Salon is ideal for the entire family at all ages. He and his wife have run a salon there for years with a huge following. Also, we want to tell you about La Taberna Restaurant. It has the freshest Mexican food in town and a well-experienced chef. You will be most surprised not only by the food, but the reasonable prices. Also, I want to tell you about the nail salon. It's luxury nails. Let me tell you, they do everything, both for walk-in clients and appointments. Appointments are really appreciated, but they treat all clients professionally. Now, I want to repeat to you, this is located on US 1, just east of Highland Drive at the traffic light. It's a beautiful yellow building with a maroon awning. We look forward to seeing you there. Come on over.
At Sunshine Furniture, our 35,000 square foot showroom is filled with the largest selection of coastal furniture on the Treasure Coast. Sofas, love seats, dining sets, bedroom groups in the latest styles and colors from Four Seasons, Braxton Color, Riverside, Hooker, Capri, Tommy Bahama, and more. We're the outdoor furniture experts and have anything you need for your outdoor living from Lloyd Flanders, Kingsley Bate, Brown Jordan, and Woodard, including a gallery of maintenance-free furniture from Berlin Gardens and Pollywood. Right now, during our summer savings event, we have lots of great half-price specials, including 50% off on all in-stock Universal Coastal Living collections. And all pictures, lamps, and accessories are half price. Sunshine Furniture, $12.95 US 1 in the Publix Plaza, Vero Beach. Don't forget to visit our outlet and sales store directly across the street that is filled with name brand closeouts. And visit our website at sunshinefurniturecasual.com.
Big news, Treasure Coast. Your favorite mortgage team just got even better. Introducing the same trusted faces you know and love, now with Union Home Mortgage.
Hi, this is Shannon Pohl.
Hi, this is Lucy Cranker.
And these high-producing team members bring decades of experience, unwavering honesty, and hearts of gold to every home loan. And here's the best part. Same local processing, underwriting, and appraisers you rely on. Contact Union Home Mortgage.
Visit us online at shannonCpohl.com
and LucyCranker.com.
Hi, welcome. Well, getting on with this, there are a couple of stocks that I would recommend for those who are middle-aged and younger who really don't have time to watch it too frequently. You have one or two jobs and a family. In addition to the Vanguard one that I told you about earlier, the S&P 500 Index Fund, I recommend another Vanguard, which is the high dividend stocks. And you do better with that than you do with either a savings account or even, even CDs. Now, there is something else you can do real quickly because we don't have much time. You can do what I call, and a lot of people are doing more of it, a CD ladder. Rather than leaving money in a savings account where you get 0.01 or 0.001 interest, let's say you have $10,000 in a savings account. Take 5 of it out, buy a CD that matures in 2 or 3 months, and you at least get 3 to 4% interest on it. Put it back in your savings account, and then depending how the market goes, if interest rates are going up or going down, get another CD if interest rates are going up. Otherwise, put it back in the savings account, and you haven't lost a nickel, and you got more interest than leaving it in the savings account is giving to you. That only takes one visit to the bank to get a CD. It's not too bad at all. So have a good week, you guys. See you next time.